Hello, Brett Ellis with the Ellis Team at Keller Williams down here in sunny Southwest Florida. Got another real estate update for you today, and we're going to go through a number of things. The first graph I'm going to show you is the supply and demand graph. This is the supply of homes, and this is the demand for homes. Now, demand in July starts to go down a little bit every year, but look at this on the supply side. It's coming down quite a bit. Now, that happens every year. It just so happens that our supply is so much higher than in previous years, of course, compared to 2022, but at least it's coming down. That's a function of many sellers are taking their homes off the market, some are selling, and we're going to run through all the numbers here. The one thing I like to look at is what's the difference, because that tells me, is this going down faster than this? And so we created this graph called the gap. And the good news is the gap is coming down. So the gap between this number and that number is shrinking. So it's a function of pending sales must be a little bit stronger and homes are coming off the market. So that's good. Let's look at the weekly inventory count. And you see it is higher than previous years. And we track this weekly, but it is coming down. If I show you the condos, the graph is essentially the same, just different numbers. Let's look at sales prices from 23 to 25. So if you bought a home in 23, you've probably lost money because the market has been coming down since 23. So I'd like to look at what's happened in the last year. So one thing that we know, these are the average prices and these are the median prices. The median price last year was 400,000. This year it's at 380. But it's up a little bit from last month, which was 379.9. So that's a good sign. The median or the average price was 522,937. Now that's what it is right now, 522,937. It was 545,201. So the average is down 4.1% and the median is down 5%. That's better than May numbers. They were down about 9%. So that's a good sign. Let's see what else we've got here for you. Let's look at the total listing inventory going back from 2016. You see it is much higher, coming down, so that's a good sign. Now, where have all those listings gone? They haven't all sold. We call that shadow inventory. There's a lot of sellers that have raised their hand. They would have liked to have sold, but they said, I'm out. I don't like these prices. I don't like these terms, so I'm not selling right now. So they've tapped out, but they raised their hands once. Chances are those are going to come back on the market again someday when the market starts doing better. That may prevent the market from huge price increases because a flock of sellers, and we estimate there's maybe 2,500, 3,000 of them, are going to come back on the market at some point. So that's just something we'll be keeping an eye on here. These are the homes closed. Homes closed in 2025 were actually up versus 2024. And we were up in closings 13.2%. Now, of course, we're down from 22 and 21, but it's good to see we've rose above the 2019 levels. We've been above, we're below last month, we're above again. So that's kind of a good sign. That means there's demand there. As these interest rates start coming down a little bit, the buyers are going to turn on. Now, the sellers are going to turn on too. So it may be a stalemate, but at least there's movement in the market. So that's one of the things we're going to keep an eye on. This is prices from 2020. Obviously, if you bought in 20, you're better off now than you were then. So you've made money. If you bought in 22, or yeah, it's definitely 22, you probably lost some money. That's just the way the market goes. And let's see, what else would I be able to tell you about? Pending inventory, down about 9.6%. So that's not good. We're up 13.2% in closed sales this month. We're probably going to be down in future months just because that pending inventory is down. Inventory active listings is up 28.6%. But new pending sales are up 5.7%. So this market is like in flux. It'll turn on and turn off depending on what rates are doing for that day. That's pretty much it. That's your Southwest Florida real estate market in a nutshell. Kind of a mixed bag. Buyers turn on, they turn off. We think sellers are turning on, turning off. Nobody loves this market. Buyers really should love this market because they've got excellent selection, negotiating leverage with these sellers that they may not always have when these rates start coming down and things start to improve. But sellers, don't get too confident because you're not alone. Other sellers are going to come back to the market, plus all the sellers that would probably like to sell but never put their home in the market. So that's fascinating. That's something we're going to watch. And so stay tuned. Insurance is getting a little bit better. Insurance getting a little bit better. Our interest rates get a little bit better, and the economy is starting to get a little bit better, a little more consumer confidence. So we'll keep our eye on all of that, and we'll report back to you next month. Thanks for tuning in.
If you're selling or you're buying or moving right away, the Ellis Team can help you. Call the Ellis Team today.